Hello, federal employees. This is Sierra with Plan Your Federal Retirement. Thank you for joining me on today's Follow-Up Friday, where I will be covering the highlights and action items from this week's episode. In episode 86, Micah and special guests Tammy Flanagan and Kim Weaver, who is the Director of External Affairs at the Federal Retirement Thrift Saving Investment Board, they discuss TSP insider information. We are so privileged to hear insider information on the Thrift Savings Plan and to have this great opportunity. The TSP is a part of your retirement plan and it's unique for federal employees. Kim says that TSP is a part of a three-legged stool. Everything has to come together to understand what your retirement plan is going to be. Tammy adds that a lot of federal employees use their FERS supplement and their Social Security to pay their basic living expenses, but the TSP is what makes your retirement worth living. The Thrift Savings Plan makes that possible. Tammy also stressed to federal employees to contribute as much as possible to the TSP so that can be used to counterbalance the tilt to the Social Security system. Kim confirms that it is not only true, but that was the way it was designed back in 1985. Lower income participants, more of their income will be replaced by the defined benefit and the Social Security, and a smaller portion will be replaced by the TSP. It's the inverse for higher wage earners, and they are able to set aside money every 2 weeks for retirement. 87% of FERS employees are contributing to the full 5%, which means that they are not leaving free money on the table, that they are able to double that money for retirement savings. Micah adds that it isn't just free money, it's a part of your benefits. He said that we don't give investment advice from a platform, but that is one of the ones that he says that constantly rings true for everyone. Everyone should be putting in at least 5% into their TSP for retirement. Tammy thinks of it like a deferred 5% pay raise, even though we don't always like that delayed gratification. You're putting it in your TSP account, which is your account. Kim says that under the law, it is your account. They just hold it in the trust for participants, and it's protected for each individual participant because it's their money. Tammy adds that there is a misunderstanding when you get your money into our account. You're getting funds matched, and that is your money 100% immediately. The only thing that has to be vested is the 1% for the agency. Kim confirms that this is automatic for 2 to 3 years depending on which system that you're in. Micah brings up TSP distributions and asks Kim what the most frequently used distribution option is. Kim answers that hands down it's the monthly payments based on our life expectancy. They use the IRS chart that is recalculated every year. Kim said that there is another option to choose your monthly amount. Kim brought up that if the RMDs need to be taken out that year, that they will send out the additional money in September so that you're not penalized. Micah mentioned that a benefit to waiting until December to process the RMD is that something can change and the Congress can say that you don't have to do an RMD this year. Something like the COVID being an example of that. Tammy asked if there was a statement that they get in the mail, and Kim confirms that there's always a paper notification that there was a deposit, but there's not a statement. They are working on doing these by email as they recognize that most would rather have it by email. Tammy asks about quarterly payments then, and then also an annual payment, and wanted to confirm if you're able to have more than one distribution at a time. Kim cautions us that you cannot have 2 withdrawals in a 30-day period. Kim says that they don't want to limit people to their money, but this allows processing time so that the processing streams don't cross and things don't get mixed up. Micah asks a clarifying question on whether it's 30 days from the distribution request or 30 days from when the distribution went out. Kim says that she's not 100% sure, but she believes it's from the request date. Micah asks about irreversible distribution options. Kim answers that there are 2. 1, if you purchase an annuity through the TSP with their vendor. They take the money out of your account and use all or a portion of it to purchase an annuity. That is a done deal. Kim cautions that sometimes people think that the annuity and the monthly payments are the same thing, but they are most empathetically not the same thing. Kim agrees with Micah that if you ever see the word irrevocable, to stop, and if you need to, call the TSP line. The reps will walk you through the options and what they all mean. The second one is if you roll your entire balance out and you zero out your account. you cannot bring the money back. Kim mentions that the minimum is $200 to leave in there, but if you fall below $200, which could happen due to the markets, she always recommends a higher amount as a buffer. If it falls below $200, then they automatically close the account. Micah confirms that leaving a slight balance there leaves a foot in the door. Micah also brings up that when he's talking to clients that they are surprised they can't put the money back. He always tells them that, hey, you can go back to work with the federal government and open up a TSP account if you want. But then all of a sudden, retirees don't find that as appealing as an option anymore. Kim says that they have a roll-in concierge service. So if you ever want to roll money into the TSP, you can call the Thrift line and they will help you move money between plans and do the paperwork, which is not the easiest process in the world. Micah mentions that one of the biggest mistakes that he has seen with the TSP is people not understanding the difference between transfers and rollovers. If someone says, I'm going to put money into the TSP, I'm going to withdraw it from my 401k, and then I'm just going to put it back into my TSP account. It's not going to work that way, and it comes with complications, potential taxes, and issues. Things can go from a great decision to an irreversible tax problem really quickly. Micah also mentions that sometimes we have to swallow our pride and get more information because we think we know what something is and how it works, but it's worth picking up the phone and just asking for help and chatting with someone about it first. Micah reiterates to know the right answer before you pull the trigger. Kim agrees and says that especially with tax advantage money, there are IRS rules that are attached and are relatively unforgiving in the overall scheme of things. Tammy asks Kim to walk us through when someone is ready to leave federal service and they still have access to the money and the thrift. What are some of the things that they can do in order to make those elections? Kim starts off by saying that if you do separate from the government, you are more than welcome to leave your money at the TSP. However, if you do and you want to make a withdrawal, you would log into your TSP account and fill out a form online. If you are married, your spouse will get an email to provide their consent. Then the TSP will process the withdrawal. Kim reiterates that if you're filling out a form online and you don't know what something means, to please give them a call and they will walk you through it. Don't check it out and find out later what you elected. Pick up the phone and call first before you hit the submit button. Kim also says that if you don't have a computer or for any reason you don't want to do it online, you can always call the Thrift line to do it as well. They will mail you a form depending on the transaction and it will be coded to you specifically, which is an anti-fraud measure that was implemented. Tammy asks about if the participant passes away and the beneficiary needs to contact the Thrift. Kim answers that there's always a theme here to just give them a call. You would provide the TSP with a report of the participant's death and a copy of the death certificate if you have access to it. Then they will review the beneficiaries and begin the process of processing the death benefit. Micah confirms that you cannot do a rollover on any inherited money. Micah encourages that anytime you want to make a withdrawal, to talk with a tax advisor because there are different types of tax consequences that can be there. The TSP is not set up to give tax advice on how this is going to be set up. Micah had an experience with an estate where an attorney said that there were no estate taxes, but there will be ordinary income taxes. So then there's this big tax bill that has to be paid, and he had to be the bearer of bad news. Kim added on, especially with the IRAs, because the rules have changed. There is no longer a stretch IRA, and now you have to take out your money within 10 years. Kim also confirms that they are not in any way, shape, or form able to give tax advice, but they do encourage people to understand the ramifications of what they're doing. Tammy says that she encourages people to file their beneficiary form with the death benefits publication with it, because people don't know what the consequences are. Micah adds that death is really emotional. You become an executor or a personal representative usually because you were a close family member and you lost someone that you loved. You could still not be making good decisions because of that emotional effect that's there. Kim agrees and says that you are then making decisions that you are not fully comprehending or prepared for. Kim says that if it's a spouse, it goes into a spousal beneficiary account and there is no urgency. If your beneficiary is someone unrelated to you, then there is a temporary account that is created for only 90 days, and a choice would have to be made. If a choice isn't made and it doesn't roll out into another account, it will auto-force out a check. Kim says that notices do go out, but when you're grieving, reading notices from the TSP office is not the top of your list. Micah asked a clarifying question on if it's 90 days from the date of death or from when the account was created. Kim confirmed that it's when the account is created. So Micah said, it gives you a little bit of wiggle time. Micah then transitioned the conversation to discussing timelines and talking to people about how the TSP is not your bank account. There's investments, tax consequences, and a timeline. Micah asked Kim, what's the general timeline when someone wants to take their money out and when they process it online to when they actually receive the money? Kim answers that it depends on a few factors, like do they have current financial institution information on file? And it depends on the spousal approval as well. Another example is if it's the afternoon. Then it has to wait until the morning, and that request would go to BlackRock and they would do the trades. Then the money comes back to the Treasury/TSP account. Then they tell the Treasury where to send it. If it's a check, then it's mailed. If it's an EFT, then it will be electronic through the ACH process. And Kim says they are not a bank. They just don't have the money sitting around to where they can just pull it and send it. They have to actually sell the shares that are being invested. For example, if you put in a request on Friday afternoon, the sale isn't going to happen until Tuesday. Kim said that some people get upset thinking that they're holding onto their money unfairly, but they just don't have the money. It's invested on their behalf. Tammy brings up that if you think you might need to make a request, to go ahead and get bank information on file ahead of time. That way, it's ready to go when you need it. Kim confirms that the financial information has to be on file for a full 7 days before they can process the withdrawal, which is another anti-fraud measure that was implemented. Tammy also brought up that you can't choose where the money is being taken out of. If you need $1,000, you can't say to take it all out of the G fund. Kim confirms that you can't choose, but afterwards says that you can rebalance instead. Micah goes back to the timeline and says, okay, so there's a trade plus 2 days, then it's another 2 to 3 days for the EFT to go through since every bank can be a little different. And Kim says that it depends on the bank and how many credits they're allowed to do in a day. Kim said that 2 days is always possible, but it's more likely going to be 3 to 4 days. She also said that there's been instances where it's been longer because the bank hasn't credited the account for whatever reason. Micah said that he would just plan on at least a week if you need the money in advance and you have institution information on file. If you don't have financial institution set up, then it's going to be 2 to 2.5 weeks. Kim adds that if you have a check mailed to you, that it could be even longer. And Micah confirmed that with us being in Alaska, we always tell our clients it will be at least 2 weeks for the check to come up to us. Micah had another question about international transfers. Some clients have a great career and then they want to move overseas after retirement, but that doesn't mean that they have to get rid of their TSP account. However, there are limitations on how you can take the money out. Kim says that's correct, because the Treasury can only send money to a U.S. financial institution. Kim encourages you to maintain a U.S. bank and a bank wherever you are and link those two accounts. You can get a check mailed, but then you have international mail and multiple post offices involved too. Tammy says that we never think of these things when we have this wonderful dream of moving to Tahiti. But Micah said it's just thinking ahead about these things and getting things set up in case you need them and getting ahead of these things. This podcast is all about action items for our listeners. Micah's action item is to figure out exactly what your withdrawal options are and then contact the TSP to find out how it really works. Tammy's action item is to make sure your beneficiary designations is up to date and make sure your address is current with the TSP as well. Kim's action item is to go to the TSP website and search for online learning. They have a bunch of webinars that are available that have been pre-recorded and you can go and watch them anytime. My action item is to re-listen to the original episode to hear the great conversation between Micah, Tammy, and Kim. And finally, share this podcast with a friend. With your help, we can achieve our goal of helping 1 million federal employees just like you.